Welcome to the Deep Dive. Yesterday, May 9th, 2025, LexinFintech, that's ticker LX, closed, trading at $7.79. But here's what really jumps out. The 52-week range. It's been as low as $1.57 and as high as $11.64.
Oh, yeah. That's quite a swing. Definitely tells you there's a story there, maybe opportunity, maybe risk.
Exactly. And that's what we're digging into today for you, the learner. You wanted a quick but thorough understanding of LexinFintech.
So we pulled together a bunch of sources. The main one we're leaning on is the LexinFintech Deep Research 2025.
Right, and that's crucial because it includes market data right up to yesterday, May 9th.
Fresh info.
So our mission here, to pull out the really important insights, we're looking at it through a value investing lens, the business, management, financials.
And importantly, the potential impact of those 2025 U.S. tariffs.
Yeah. Is this an aha moment, or is it something you need to be really careful about? Let's find out. First off, what is LexinFintech? What do they actually do?
Okay, so fundamentally, they're a technology-driven online consumer finance platform in China. They basically use tech to connect younger, educated consumers, that's their target market, with financial institutions. Their goal is making finance more accessible for that group.
Okay, makes sense. And how do they do that? What are their main products or platforms?
Well, their main ones right now seem to be Fenhuile, that's for installment consumption, like buying things over time.
Got it.
And Le Card, which is more about savings and membership benefits. There used to be more talk about Juzai, their investment platform, but that seems less prominent now.
Interesting. So focusing more on lending and benefits. How does that translate into revenue? What did 2024 look like?
Well, the biggest piece of the pie was their credit facilitation service income. That brought in RMB 11 billion.
11 billion.
Yeah, and that was up almost 14% from the year before. So that's clearly the main engine.
Right, facilitate the loans. What else?
Then there's the tech empowerment service income. That's where they provide tech solutions to other businesses, right?
Yeah.
That hit RMB 1.88 billion, also up nicely, almost 15% year over year. And what's interesting there is the customer retention, they said over 80%.
That's sticky. Suggests those clients are happy.
It does. But then on the flip side, their installment e-commerce platform service income, well, that took a big hit.
How big?
Down nearly 25% to about RMB 1.3 billion.
Wow. Okay. That's a significant drop. Sounds like a strategic shift is underway there.
It really points that way, doesn't it? Moving away from directly selling stuff online and focusing more on the finance and tech services side.
Aimed at that young, educated crowd in China. So what about the market they're playing in? How big is this whole Chinese fintech space?
Oh, it's massive and still growing fast. In 2024, estimates put it at $4.59 trillion.
Trillion, okay.
Yeah, and it's projected to hit nearly $10 trillion by 2030. That's a CAGR of almost 14%.
Huge growth potential. What trends are driving that?
A lot of it is technology, more AI and big data being used, the development of the digital yuan, ECNY, plus growth in related areas like insurtech and wealth tech.
But it's China, so regulation must be a big factor, right? We've seen crackdowns before.
Absolutely. The regulatory environment is, well, it's much stricter now than it was a few years ago, especially after the P2P lending crisis.
Right.
The guiding principle now is kind of same business, same rules. Key players are the PBOC, the NFRA, that's the National Financial Regulatory Administration, and the CCAC, the Cyberspace Administration.
So multiple agencies involved. What are they focused on?
The usual suspects, really. Data privacy is huge, consumer protection, anti-money laundering, anti-monopoly stuff. And it's worth remembering, crypto trading is a no-go in China.
So a complex web of rules to navigate.
Right.
Makes sense. Who are they up against in this giant market? Who are the main competitors?
Well, you've got the absolute behemoths.
Yeah.
Ant Group through Alipay probably has around 25% of the market.
Okay.
JD Technology, maybe 15%. Tencent's a massive player, too, with WeChat Pay and WeBank.
Right, the giants.
Yep.
Any closer competitors?
Yeah, there are companies more similar to Lexin's model, like Kifu Technology and Finvolution Group.
And where does Lexin fit in all this, market share-wise?
Estimates put them somewhere in the 3 to 7% range, so definitely more of a niche player compared to the big guys. Competition is intense.
No kidding.
Yeah.
So with that kind of competition, what's Lexin's edge? Do they have an economic moat?
They really emphasize their tech. They talk about using AI and machine learning, having developed like 87 proprietary models.
Okay.
They claim these handle over 98% of their credit assessments algorithmically and have improved predictive accuracy by about 18%.
That sounds significant if true.
Yeah, and they're investing in it too. Like RMB 130 million in R&D just in Q1 2024 for large language models. They claim that boosted coding efficiency by 35%.
So tech is a big part of their story. What else?
Brand and customer loyalty seem pretty strong too. That repeat borrower rate over 85% in fiscal 24 is impressive.
Yeah, that is high.
And broader customer retention around 83.5%. That suggests people stick with them once they're on the platform.
That loyalty is valuable. Any other advantages?
Network effects and partnerships probably play a role. They mentioned having over 140 funding partners, over 100 tech empowerment clients with good retention,
Right.
partnerships with major tech platforms and banks. That expands their reach. Plus, the tech model itself offers scalability, potential cost advantages. The CFO even mentioned better customer acquisition efficiency.
Okay. And I remember reading something about an investor calling them unique.
Yeah, that was PEG back in 2019, an external validation suggesting they saw something different in Lexin.
Seems like a decent set of advantages, but surely there are risks tied to these strengths. What's the counterpoint?
Absolutely. The big one is credit risk. It's inherent in lending, right? Their 90-day plus delinquency rate was 3.6% at the end of 2024. And some earlier figures from a SWOT analysis pointed to higher default risk in NPLs in 2023. Plus, they increased provisions for financing receivables in Q4 24.
So managing that credit risk is clearly an ongoing challenge.
Definitely. It's something you constantly have to watch in this business.
Okay, let's shift gears to the people running the show. What about the management team? Who's in charge?
The main figure is Jay Wenjie Xiao. He's the founder, chairman, and CEO. Came from Tenpay originally.
Right.
He talks a lot about a prudent operating strategy. And crucially, he owns a lot of the company, about 26.7% of the shares as of early 23.
Okay, significant skin in the game.
Yeah. But even more significantly, he controls over 77% of the voting power.
Wow, okay. That's huge control. What are the implications of that?
Well, it aligns his interests very closely with the company's performance, which is good. But it also concentrates power massively. Decisions really rest with him.
A double-edged sword, then. Who else is on the team?
Key figures include Zanwen Qiu, the chief risk officer who actually came over from Ant Group late last year. That's a notable hire.
Yeah, bringing experience from a giant.
Exactly. And James Zheng is the CFO.
Okay. So, given Zhao's control and the team, how are they allocating capital? What are they doing with the company's money?
Well, they have a dividend policy. It's semi-annual. And they actually just increased the payout ratio to 25% of net income starting this year, 2025.
An increase. What was the latest payout?
For the second half of 2024, it was US$11 per ADS. That gives a forward yield of roughly 2.8% at the current price.
Okay. What about share buybacks?
They did authorize a $50 million program back in March 2022 for 12 months. We'd need to check the latest 20F filing, the 2024 one, to see the status of that or any new programs.
Right. So increasing the dividend, what does it usually signal?
Often it signals management's confidence in future profits and cash flow. It could also suggest maybe they see fewer really high return places to reinvest all that cash back into the business right now.
Makes sense. So how are they balancing that return to shareholders with reinvestment?
Their focus seems to be on profitability and margin expansion for 2025 while still investing in R&D, like that big LLM investment we mentioned.
Got it. Do we have any sense of their return on invested capital?
It's tricky without the full 20F, but Morningstar had a normalized ROIC around 7.9%, and Alpha Spread showed a 3-year average ROE of 21%. So some decent historical returns, but you'd want the precise ROIC calculation from their filings.
Okay, so overall capital allocation seems reasonably balanced. Now, what about governance or any ethical flags? Anything investors should be aware of?
Well, they do communicate regularly, earnings calls, press releases, SEC filings like the Form 20F. That's standard. But back in 2020, there was a short seller report from Grizzly Research. They made some pretty serious allegations.
Like what?
Things like understating delinquency rates, flaws in their model, charging usurious interest rates, undisclosed P2P activities, potential misstatements, related party stuff, a whole list.
Oof. That sounds bad. Did anything come of that? Lawsuits?
Yeah, it led to class action lawsuits.
And the outcome?
The main one, Solis v. LexinFintech, was eventually dismissed voluntarily after the court granted a motion to dismiss, though it was without prejudice.
Meaning it could potentially be refiled, theoretically.
Theoretically. And another research firm, GMT Research, actually came out saying they thought the Grizzly allegations were unproven and didn't have a lasting impact.
Okay, so the lawsuit went away.
Yeah.
But the fact that those allegations were made?
Exactly. It highlights why investors need to stay vigilant, especially monitoring their financial reporting and risk management, Having PwC as their auditor provides some oversight, but it's definitely something to keep in the back of your mind, particularly operating in China.
Good point. Let's dive into those financials then. What are the key numbers telling us? How was FY 2024?
Okay, so for the full year 2024, revenue came in at RMB 14.2 billion. That's about 1.95 billion US dollars.
And growth.
It was up 8.8% compared to 2023, which is growth, but it's a definite slowdown from the 32% growth they saw the year before that.
Okay. Significant deceleration. And did you say loan volume was down?
Yeah, total loan originations actually fell by 15% in 2024, which fits with that idea they're shifting focus, maybe prioritizing quality over just sheer volume growth.
Right, chasing profitability perhaps. How did that play out on the bottom line? What about net income?
On a GAAP basis, standard accounting net income for the full year was up slightly, 3.2%, hitting RMB 1.1 billion, or about $150 million US.
Okay, modest growth.
But the interesting part was Q4. In the fourth quarter of 2024, GAAP net income more than doubled compared to Q4 2023.
A strong finish to the year then. What about adjusted figures? Sometimes they tell a different story.
They do here. Adjusted net income for the full year actually declined by 19%, landing at RMB 1.2 billion or $165 million US.
Declined, even with that strong Q4.
Yeah, but similar to GAAP, adjusted net income in Q4 itself was up strongly, almost 38% year over year. So there's a divergence between the full year trend and the Q4 momentum, and between GAAP and adjusted. You'd need to dig into the adjustments they made.
Definitely something to scrutinize in the filings. What about margins?
Net profit margin for the full year was around 7.7%, and their net income take rate, basically how much profit they make per loan dollar, seemed to improve in Q4, hitting 1.31%.
Okay, and earnings per share.
For FY24, diluted EPS was US dollars and 89 cents, and adjusted EPS was USCR and 97 cents. Historically, though, their EPS has been pretty volatile year to year.
So consistency is maybe the question mark there. What about returns like ROE and ROA?
For 2024, ROE was around 10.8%, ROA about 4.85%. You see slightly different numbers depending on the source and calculation period, but that's the ballpark.
Okay, profitability picture is a bit mixed, maybe improving towards year-end, but with some full-year concerns. How does the balance sheet look? Are they financially stable?
Generally, yeah, it looks reasonably solid. As of year-end 2024, their current ratio and quick ratio were both healthy at 1.86.
Indicating good short-term liquidity.
Exactly. Plenty of working capital, too, over RMB 8 billion. And their debt levels seem manageable. The debt-to-equity ratio was under 0.5x.
It's pretty good.
And they seem to be managing funding costs, well, those were down significantly year over year in Q4. Plus, issuing that AAA-rated international ABS back in May 24 is a good sign for their access to funding.
Okay, balance sheet looks decent. What about cash flow? Is the business actually generating cash?
That's the area where we really need that full 2024 Form 20F. The picture is a bit murky right now.
How so?
Well, some sources suggest positive free cash flow recently, maybe around RMB 1.6 billion. But others show negative levered free cash flow, maybe negative $150 million or so.
Okay, conflicting signals.
Yeah, and historically, they've even had periods of negative operating cash flow. So confirming consistent positive free cash flow generation is really critical. That's what ultimately supports the dividends, buybacks, and growth. It's a key piece we need to verify.
Absolutely crucial. Okay, so that brings us to the million-dollar question, or maybe the $7.79 question. What's LexinFintech intrinsically worth?
Yeah, the toughest question. And valuing this one is particularly tricky.
Why is that?
Well, you've got the dynamic regulatory environment in China, the macroeconomic uncertainty, those tariffs we keep mentioning. It makes forecasting future earnings really difficult.
Right. Their long-term earnings power seems tied to credit facilitation and tech empowerment now.
Primarily, yes. The FY24 GAAP net income gives you a baseline, but that drop in adjusted net income for the full year throws a bit of a wrench in things. You'd want to see that net income take rate stay strong or improve.
So a standard DCF model is tough.
Very tough. Forecasting free cash flows accurately is hard given the limited and conflicting data right now, and picking the right discount rate to capture all the risks. That's another challenge.
What about other approaches, like earnings power value?
You could use EPV as maybe a conservative floor value. Basically, take current earnings, assume no growth, apply a cost of capital. It gives you a baseline.
And then compare that to the $7.79 price, looking for a margin of safety.
Exactly. You need that buffer. Some analysts out there are super optimistic. Alpha Spread had a target way up at $28, implying like 70% undervaluation.
but you'd need to really believe their assumptions for that.
Absolutely. You have to scrutinize those assumptions rigorously. Given the past earnings volatility and all the external uncertainties, a conservative approach to valuation here is, I think, essential.
Makes sense. Lots to weigh up. Okay, that perfectly sets the stage for the second half. We need to look at market sentiment, who owns the stock, dig deeper into those risks like the tariffs, and try to pull it all together. Stay with us. End of first half. Start a second half. Welcome back to the deep dive. We've covered LexinFintech's business, management, and financials. Now let's look at how the market perceives the company. What's the general sentiment out there right now, say mid-May 2025?
Well, broadly speaking, it seems cautiously optimistic. If you look at analyst ratings, the consensus leans towards strong buy, according to Zacks.
Okay, that's pretty positive.
Yeah, the average price target is around $9, suggesting maybe 10–11% upside from the current price, though the range is wide from like $4.40 up to $13.60.
Quite a spread. Any notable calls?
UBS maintained their strong buy with that high $13.60 target back in March. Citigroup upgraded to strong buy late last year, and IND Money shows about 78% of analysts covering it are saying buy.
So analysts seem generally constructive. What about the other side of the coin, the short sellers? Are they still active?
It's interesting. The reported short interest actually decreased between March and mid-April 2025. The number of shares shorted went down.
Oh.
Yeah, from almost 8 million down to about 5.5 million. And the days to cover ratio also dropped, suggesting maybe less intense short pressure.
The shorts are backing off a bit.
It seems like it, but it's not like they've disappeared. 5.5 million shares short is still a notable amount. Fintel data around early May still showed that level and a significant chunk of daily short volume happening off exchange. So skepticism definitely remains.
Okay, so analysts leaning positive, short interest down, but still present. What about the options market? Any clues there?
The put-call open interest ratio for Lexin itself was pretty low, like 0.34 recently, which typically suggests more bullish bets, more open interest in calls than puts.
Right, calls being bets, the price goes up.
Exactly. Looking at the open interest for 2025 expiration dates, there's activity in both puts and calls, but it does seem like calls have higher open interest at some key strike prices. The broader market put-call ratio was also below 1, for context.
So options traders seem somewhat bullish too. But you still used the word cautious earlier for the overall sentiment. Why the caution, despite these indicators?
I think it comes back to the fundamental risks we talked about in the first half, the regulatory uncertainty in China, the fierce competition, the macroeconomic picture, especially with those tariffs looming.
Right.
So while sentiment indicators might look okay, a value investor has to weigh that against the underlying business realities and risks. You can't just follow the crowd.
Absolutely. Sentiment is one thing, fundamentals are another. Okay, let's talk ownership. Who actually holds LX stock?
Well, institutions are pretty significant owners, holding around 45% to maybe 46.5% of the ADSs.
Any interesting moves recently among those big players?
Yeah, looking at recent filings like Q4 24 or Q1 25, you saw some shifts. Phil Ltd seemed to decrease their stake, but others like Morgan Stanley, Acadian, Arrow Street, State Street all increased their positions. Bright Valley even initiated a new stake.
So more buyers than sellers among the institutions recently.
It appears that way, yeah. The data showed more institutions increasing positions than decreasing. Overall, something like 128 institutions holding over 60 million ADSs.
Suggests maybe growing institutional confidence.
Could be, or maybe just index adjustments. It's hard to say definitively, but it's movement worth noting.
What about insiders, like CEO Xiao?
Well, as we mentioned, his ownership stake was huge, like 26.7% shares, but 77.2% voting power back in early 2023, thanks to that dual-class structure. Directors and management collectively held even more.
Right. Any recent buying or selling by them?
Based on available data up to May 2025, doesn't look like there have been any significant open market buys or sells by insiders in the last, say, 3 to 12 months. We need that 2024 Form 20F for the absolute latest snapshot, though.
Got it. So Xiao's control remains the key governance point there.
Correct.
Okay, let's try to pull the risks and opportunities together now using a SWOT framework. Strengths, weaknesses, opportunities, threats.
Sure. So strengths, definitely their tech platform, that AML focus, the brand loyalty among young Chinese consumers. And the growth in that tech empowerment business seems like a real strength.
Okay. Weaknesses?
The recent decline in loan originations and active users is a concern. That big drop in the e-commerce business is a clear weakness, or at least a struggling segment.
Yeah.
And just their general reliance on the Chinese consumer credit cycle.
Opportunities.
The sheer size and growth potential of the Chinese digital finance market is the big one. More potential for AI integration, maybe some consolidation in the industry could benefit them.
And threats. We've touched on many already.
Yeah, the big ones are intense competition, always. The regulatory environment, always subject to change. Macroeconomic headwinds in China itself. Credit risk, especially if the economy slows. And those U.S. tariffs.
Right. Let's focus on those tariffs from 2025. How exactly might they impact a company like LexinFintech, which is mostly domestic Chinese focused?
You're right. The direct operational impact is probably minimal. They don't sell much to the U.S.
So it's indirect.
Exactly. The main risk is the indirect macroeconomic fallout within China. If the tariffs slow down China's overall GDP growth,
Then consumer confidence might drop.
precisely. Less confidence, maybe less spending, potentially less demand for consumer loans like the ones Lexin facilitates.
And potentially higher defaults on existing loans.
That's the other key risk. If consumers are squeezed economically, credit quality could deteriorate across the board. Funding costs could even be impacted, though the Chinese government might step in with some support measures.
And China will likely retaliate, right? Adding more uncertainty.
For sure. Retaliatory tariffs, domestic stimulus. But how effective those measures will be is the big question. So for Lexin, the core risk from these tariffs is really about the health and sentiment of their Chinese consumer base.
Makes sense. What other major risks stand out beyond the tariffs?
Regulatory scrutiny remains number one, I'd say. New rules on lending rates, data privacy, capital requirements that's always hanging over the Chinese fintech sector. Remember the concerns about the 15.4% rate cap historically? Then there are the existing macro headwinds inside China. The property sector issues, sluggish demand, credit risk, as we keep saying, competition. And finally, those VIE structure risks the legal complexities of holding shares in an offshore entity rather than the mainland Chinese operating company.
Okay, that's a hefty list of risks. So let's try to wrap this up. We've gone through a lot. What are the key takeaways for you, the learner, looking at LexinFintech today?
All right, let's boil it down. Positives. The stock looks relatively inexpensive on some valuation metrics. They seem to be making a deliberate, maybe prudent shift towards profitability over just growth. And that increased dividend is attractive for income seekers.
Okay, the bull case points.
But you absolutely have to weigh those against the negatives and uncertainties. Fierce competition, the unpredictable regulatory environment, the real credit risks they face, those broader economic headwinds in China, amplified now by the U.S. tariffs, and that worrying decline in adjusted net income for the full year 2024.
So definitely not a slam dunk investment case either way. What's the bottom line then?
The bottom line is that valuing LexinFintech accurately right now is really challenging. A conservative approach is absolutely essential.
Does the current price offer a margin of safety?
It might, based on some metrics, if things go reasonably well. But those external risks, especially the tariffs and the regulatory climate, are significant clouds. They demand caution.
So who might consider investing here?
I think you'd need a pretty high tolerance for geopolitical and regulatory risk, and you'd need strong conviction that management, led by Xiao, can really navigate these choppy waters effectively and get back to consistent, sustainable profit growth.
And as you said, there's still key information pending.
Definitely. We really need to see the detailed cash flow statements in that full 2024 Form 20F. And just as importantly, we need to watch how they actually perform through 2025 with these tariffs in place and how the regulatory story evolves. That real-world performance data is crucial.
So, based on our deep dive into LexinFintech, considering its strategic pivot and these big economic questions, the crucial thing for you, the learner, isn't just looking at today's numbers. It's about watching how this story unfolds. How do they handle the pressure from the U.S. tariffs? How do they navigate China's evolving regulations? What's their next strategic move? Will it strengthen their position or expose vulnerabilities? That's what you need to track.
Exactly right. The plot is still developing. It's one to watch closely.
Well, if you found this deep dive helpful for navigating that complexity, please subscribe to the Stock Analytics AI YouTube channel. We do these analyses regularly. All the sources we discussed are linked down in the description.
And just the usual reminder, everything we talked about is based on information available up to May 9th, 2025. We used AI tools to help process the source material, but the interpretations and conclusions here are ours.
That's right. This is purely for informational purposes. It is definitely not financial advice. Please always do your own thorough research before making any investment decisions.